Hello guys, this is Vinit from Edge-Forex. Today is the 16th of August 2024 and we are looking at a monthly chart. Yes, you heard me right, monthly chart for EURUSD, EURUSD, going back all the way to its beginning in 1971. So in the 90s when Euro started, is Euro. Before that it is Deutsche Mark, just for the clarifications. I I look at this chart, I come back to this chart every few months just to make sure that I am on top of what the long term trend is. I understand where things have been and where things are going because nothing is more clear than a monthly chart because it takes out all the clutter, all your economic news. It's really, really smooth. It, yes, of course, it's affected by economic matters, but all of that is right there in one big picture because it's all the noise of an hourly chart, 4 hourly chart, a weekly chart, daily chart. It's all smoothed out because it's all one candle for the entire month of price action. So it gives you a really, really long-term picture. So I like to come back to this chart to give me clarity as to where things are and what to expect, in the next coming months. So I have my macro picture is clear in my mind because this is the chart that gives me that clarity, gives me that um, a picture that I follow, that I have this picture in my mind every time I'm analyzing anything on the short term. Because again, this is going back 50 plus years. So it doesn't get any more smoother or any better than this particular chart. All right, guys. So let's look at the channel. EURUSD, it loves to trade in a channel. It loves to trade between two lines. It doesn't like to deviate too much outside of a channel. So let's see what that really, really long-term channel that was formed, that this pair has been trading in for majority of its life. All right, guys. So here, so that's the low end part of the channel. That's the top of the channel, and it's been trading in that particular channel for a very, very long time. And now, what do I see here? Something right here. Let me zoom into this chart. Something happened, and let me draw a vertical line so I know exactly what this happened. So something happened March, April time frame in 2022 because it's actually broke this in the March, is when it actually first broke out of that channel. It was in March of 2022. And then it came down, went up to retest it, got rejected, came back up, didn't quite touch the channel or the trend line, got rejected again, and now it's just kind of going parallel. It's a sideways consolidation. So to me, it's looking like a bearish flag. But again, let's not get ahead of ourselves. Let's just analyze this. Let me zoom out again. Okay, and let me get rid of this particular. Actually, let's leave it here for now. So let's do a path. I love doing paths here. Okay, I go here, then it went up here, down here, up here, here. Instead of bouncing back, it broke. And then bounced back to check, another bounce back, rechecked, and that's where it's at right now. Sideways consolidation. So then but I saw this break, I get curious. All right, what's going on? What happened in that time frame where it actually broke that 50-year channel or a 50-year trend line? So what I did was I pulled up the data, monthly market summary from Rothschild for March 2022 to see exactly what happened. And guys, what caught my eye was Fed raised the policy rates by 25 basis points. So that is the first time they raised the interest rates after the pandemic, after all those billions and billions were spent. And then again, other thing was that the reason for the raise of the interest was the headline inflation rose to 7.9%. That was highest ever since 1982. That was a peak of inflation going back 45 years. But the key thing is the price was still in that channel in the last inflation cycle, but now the price broke out because U.S. Fed was the first one to raise the rates. Okay, guys. So why I say that here? EC. So we right now we're looking at the ECB rates. The ECB rates are the European rates that actually affect the euro. So we know that March of 2022 is when the Fed raised their rates, and here is the July of 2022 is when ECB rates their rates. Now, going back to July-August time frame, and if we look at ECB, where did it go here? Let me go scroll down for ECB. Now, what I'm looking at is bear with me, guys. The Fed policy shift, ECB. I'll tell you what I'm looking for. What I was looking for is the inflation. I thought I saw it. But again, the inflation was very similar to what it was in the US, but they delayed their rate hikes by 4 months. So what that did was, again, I've told you guys so many times that money flows where it's treated the best. So Fed, they increased their rates in March of 2022. ECB waited till July-August time of 2022, and that is what caused that carnage in euro, and that's when it actually took a dip below under par, less than US dollar. So let's go back and look at the chart. It went, it started with 109, 110, where is that now? And went all the way down to 95 cents USD. All right. And now, why am I drawing this parallel? Because exact same thing is happening now. Rate cuts are happening now. And ECB started to cut their rates a lot before the Feds. US Fed has not even cut a single time yet. And ECB's already done it. And they're also going to do it. So by the time Fed starts to cut their rates, ECB would have done it 2 or 3 times by then. So they came to the party late, ECB that is, and they're leaving the party sooner. So they started increasing the rates late, but they have started to cut rates earlier. So they are always behind the curve compared to the US Fed. So the Fed is going to keep the rates higher for longer, making money flow more and more money into the US dollar compared to euro. And that is what we believe at Edge-Forex, makes US dollar much more attractive place to be, place to park everybody's money than euro over the long term. So if you look at over the long term, go back to 2008, 2009, euro is trading at 160. And now it's down to 110. It's actually went below par, bounced back to 110. So if you really look at the big picture, I'm not talking 10 pips, 100 pips, 200 pips. I'm looking at the big picture, going back 50 years and see what has transpired and see where things are going. And I think the picture is really clear because ECB is always behind the curve. And the reason for that is because ECB is not a currency of one country. Euro is not a currency of a single country. It's a currency for the Eurozone. It has so many countries, so no one particular government really controls the euro. You have Spain, Italy, Portugal, all these countries in the southern Europe. They slow down a lot faster than the countries in the north. So now, how can you have one interest rate policy that'll take care of an industrial juggernaut like Germany and expect the same policy to work for Spain? It doesn't make sense. It makes absolutely zero sense. And that is the reason why I believe euro in the long term is doomed. But before it goes kaput, before it blows up, it's going to go a lot lower. And that is when the countries like Germany, France, and the Northern European countries are going to say, hey guys, we can't take this because the currency is weakening, but we ought to have a stronger currency because we are the exporting nations and we need a strong currency. So, but the countries like in the South, they're not. They want a weaker currency because all their GDP is all tourism. So they want to have tourists coming to those countries and have an attractive currency. So it'll be beneficial for the tourists and for the local economies. So there is a huge dichotomy. So there are two tales of two opposites trying to work with the same currency. So that is why, looking at the chart, so let me just zoom out again. This was a huge channel that it was going up, boom, down. It broke it, and if it goes below, I would say, let me just zoom in further. The line in the sand for me, for next leg lower, and the next leg lower is going to be very, very aggressive, is at 104.5. So anything, say 105. If it breaks 105, guys, this ship is sinking. This ship is going to sink, and it's going to sink very fast. See that how fast it went from 122 to 94? It's going to go from 105 to 85, I would say, in matter of months. Not matter of years, in matter of months. And I think, looking at the chart, it's happening. See how huge waves down? This wave down here, this wave down, and look at this wave. So it's going to be a watershed moment. And I think it is going to make a lot of people a lot of money. And I want to make sure we as a group, we as a Road to a Million Club, is part of that group who is going to benefit from this watershed moment, which will happen after once it breaks 105 or 104.5. That area. I'll do more detailed analysis once we get closer to that area. Till then, it's all noise. Seriously, guys, to me, it's all noise. If it goes to 110, 111, 112, I don't care. As long as it doesn't decisively break this top range, which is around 114, say 114.5, then we'll look at it and say, hey guys, the thing got invalidated. That long-term trade is no longer valid. Then we'll look at other factors, see what's going on at that time, because nobody knows what's going to happen in the future. But the way things are shaping up now, it looks like it's going to go down and it's going to break that. And once it breaks, all hell's going to break loose. So I am also keeping a very close eye on gold, guys. Please, 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 if it breaks 2,500, jump on it. All right, guys, I'll be talking to you in another video soon. Thanks.